Fred Neumann. He is the co-head of Asian economics at HSBC. He was also a consultant on Asian affairs for the World Bank and to the U.S. and Canadian governments. He's with us from Hong Kong this morning. So, Fred, bring some perspective to the conversation here. On the one hand, very strong industrial production numbers from China, in excess of 13% last month. At the same time, inflation running at a 3-month high. And then, of course, China steps in and raises capital requirements for banks yet again.
Well, contrary to expectations, the Chinese still have a long way to go to really slow growth down to a level where price stability is again back on the radar screen. We have seen not just CPI come in higher, but also the producer price index pushing up more than expected, 6.8%. That is worrying because it does suggest that in the pipeline we still have price pressures coming through. Food prices also, again, rising a little bit on a sequential basis. So the government clearly has to do more to tighten. It did today with a 50 basis point hike, but we would expect, in fact, one more 50 basis point reserve requirement ratio hike and an interest rate hike in the coming weeks because the Chinese seem to be confident about growth. It's still all about inflation in China.
Fred, I wonder how the outlook for China's economy has changed or shifted in the last couple of weeks with all the evidence of a soft patch in the U.S.
Well, we actually had a soft patch in China as well. Now, looking back at the data, if we look at data in March and April, there was clearly a deceleration in industrial production. Exports have weakened in China. China is also taking a hit from Japan and from weaker demand in the U.S. But it's domestic demand in China that remains robust, particularly in the construction sector, and that continues to drive the Chinese economy. And perhaps a little bit too fast for comfort because inflation is still there. So I think despite the concerns that we had 2 weeks ago with a hard landing in China, today's data should swipe that aside, and it's really very reassuring to see the Chinese economy to hold up that well. But at the same time, we need to do more to address inflation there.
So, Fred, it sounds like from what you just said, no more worries about the hard landing. Is China finished tightening?
Not quite. We think one more R hike, 50 basis points, will come in the next several weeks, and one more interest rate hike. We're not quite done yet. The Chinese authorities will likely stop tightening once we get CPI readings come down a little bit, but we would in fact expect the June number to push up higher still. It might actually go up all the way to 6%, which would probably then necessitate another tightening move in the middle of next month.
Fred, thanks so much. Fred Neumann, co-head of Asian economics at HSBC.